about the week past and outlook for the week ahead. We do have some very common ground between our two speakers this Sunday, as they both are sitting on political turmoil, with the Australian Prime Minister just announcing an election and the Pakistani Prime Minister just ousted, all within the last few hours. So quite a coincidence. So I'd like to sort of drill down a little bit into that, given the proximity of the two speakers to these two stories, because they do resonate, I think, to the wider narrative where the global economic outlook might be. We see today also the first round of the presidential elections in France, coming after recent election surprise results in Hungary. And I think one common narrative through all of them has been and will be, what's the price of bread in the corner shop? Let's welcome Peter McGuire, CEO of XM Australia. Peter, Scott Morrison just called an election this morning. What's the outlook for that? Why did he do so? What's the timing, and what is the outlook?
Good morning, Sean, and thank you, Malila. The outcome, or we're probably around about 5 weeks away, Sean, from blast-off date for Mr. Morrison. I'm not sure what the electorate's going to think of him. There are very mixed bags around here as far as Australia's political views. Certainly towards Morrison, being called in public forums a bully, misogynist, and these sort of statements that certainly haven't gone well with the electorate, and certainly not with the female voters. So that's going to be interesting. The platform that he demonstrates over the weeks ahead, it's going to be very, very close call. Many pundits are saying that he's actually behind the Labor Party. There's a lot of independents that are gaining groundswell due to the management of COVID and the debt that was racked up and the way that Morrison's run things. So it's a very interesting bag at the moment for Mr. Morrison. He hasn't got a lot of friends.
The opposite, in some ways, the opposite of Pakistan, in the sense that obviously Australia is benefiting dramatically from all of these record high commodity prices. So that must be a lot of wind in his sails for re-election, given the strength of the Australian economic performance in this period of, as I say, record commodity prices.
Well, that's exactly right, Sean. It's been wonderful for the country and certainly for producers, but not for the electorate. We've seen very, very little wage growth. We've got inflation, I would say, realistically, and you talk to the man and the woman on the street and the young, you're probably in double digit, might be 15% when you're thinking about what the price of meat is and bread and utility costs. So if you really look at the true basket of what you're buying and fuel costs, they're just blown out to the upside. Coffee from $3 to $4.80, all within 20 months. So we've seen huge moves to the upside for all basics, and the electorate is certainly not enjoying that. Plenty of work out there because we're not opening our doors really to to international tourists or international people that want to come to our shores. So it's a slow drip feed. So it's going to be interesting, Sean, how this progresses over the weeks ahead.
In that point, Peter, the euro weakness seems to be a dominant narrative in recent weeks. Obviously, with the war in Ukraine, what would your outlook be given the outcome of the French election, if indeed polls are going in Le Pen's direction at the moment?
I think if Le Pen wins, Sean, it's going to, I think, certainly disrupt a lot of the current frameworks around not only the ECB, but I think it's going to send a little bit of a hand grenade across all of Europe. So there's the first part. The second part is, as far as that euro, we're going to handle under 109 now. US dollar index just shy of 100. As we know, that's weighted at around about 61% of that US dollar index is euro weighted. So I think it's hit most traders by surprise what we experienced in March. Big sell-offs with yen, big sell-offs as far as, or softness as far as euro. and it's marching towards parity. I'm not suggesting it's going to get there, but if we don't see a rate rise and we see a couple of consecutive big hits from Jerome Powell, a 50 and a 50 basis point rises in May and possibly June for the Fed, then that would push I think, the dollar up further, euro continued softness, and maybe a 105 handle is where we're at, well down from what we only a few months ago we're at a 122. So it's been dynamic for traders.
Well, looking at that, Peter, the yuan, the Chinese currency, of course, the big demand destruction story seems to be led by China under the weight of the Omicron COVID outbreak. Now Shanghai in total lockdown for 2 weeks. And yet over that 2-week period, we've seen infection rates in Shanghai grow by a multiple of 5 while the city has been in lockdown and others across the country following suit. How big a challenge do you think this is to China and to the outlook for Chinese oil consumption in the coming quarter?
It's got to be very concerning, Sean. First off, from the health aspects, as you mentioned, 5 times multiple of 5. So where are we in a month? And does it affect other major cities? And there are, numerous Shanghais across China. So there's the first part, and what impact it has, building on Maliha's comments as far as demand destruction and a strong yuan. They're the perfect ingredients for, I think, more continued volatility across that complex and big swings, the 5 to 10% moves, which won't be uncommon over a session. So it's very difficult to put a headline number. Where do we see crude by such and such date? It's more to do with what size volatility are we going to experience over that time period till we get to that date. Because you can just see such huge swings that really, I think, change the footprint from most consumers' point of view. They're just not sure what they're hearing over on a radio or a TV or a newspaper to the price of crude. It's so volatile.
Peter, looking at the week ahead, there's a few things on the horizon. One is earnings season, and the banks in particular are expected to kick off tomorrow. What's your outlook for earnings, and how is that likely to impact confidence, the momentum of the equity markets in particular?
Well, I think overall sentiment, Sean, it's got to be quite, I'd say, bullish as far as earnings to satisfy the nervousness across the market. We've got a couple of central banks also meeting this week. So you've got the tick up as far as the Fed and its rate rises, and aggressively over the next, say, 3 to 6 months. And how do earnings perform? Certainly the financial sector. Are we going to shoot the lights out, or are they going to underperform or underwhelm? And market sentiment at the moment, we saw that quite a heavy sell-off as far as NASDAQ and a number of the, if you're looking broadly, the S&P and the Dow over March. We've had a little bit of a rebound in the last week, but it certainly was shaky. Also, we're leading into Easter this week, so that's going to take, I think, I think in some ways that could be a quieter week than what a lot of traders are expecting. So, yeah, earnings, looking at the numbers, waiting for them to drop, and the sentiment associated with either it's going to be fruitful or underwhelming.
Peter, I'd welcome your thoughts on that a little bit. Strikes me, I'm not convinced Jay Powell has the cojones, as they say, to sort of take on the challenge of inflation and get rates up. Ultimately, he is a dove when it comes to rates. Your thoughts? Does he have it? Does this Fed and his board members have what looks like necessary to tackle this sort of record or elevated inflation?
Well, Lael Brainard's comments are far more hawkish, Sean. We believe that Lael Brainard will actually take the deputy chair role. So there's the first part of it. The second part is building on Malila's comments. Yes, certainly earnings, how they're going to be impacted with higher yields, and how aggressive is the Fed prepared to be. We sit here and we say, well, if you put the old measuring tools, it's a lot higher than what it should be at 7 or 8%. And if that continues to build, higher energy costs, high food costs, supply lines and supply chains being crimped, and crops and so on, then this really creates, in some ways, a perfect storm. The other side of it is, as you aggressively move rates higher, what happens to growth forecasts? We all already understand that Europe could be facing a recession in third quarter. So is that going to be a similar mindset or a similar course of events running across the US and other major markets later in the year as far as recessionary fears, which is the big word that we spoke about last time I was on together, stagflation?
We have this week now, I mean, Fed obviously is the 10,000 pound gorilla in the rate room, but we do have New Zealand central bank meeting this week. We've got, I think, the Canadian central bank,
Yes.
Even the ECB. What is your thoughts on where they may move, if they will at all?
Well, as you said, we've got the trifecta. I'm not expecting any surprises out of the ECB. We heard last, I think, a couple of weeks back as far as balance sheet and what they're prepared to do as far as, moving forward. So I'm not, again, expecting surprises, but certainly from Canada, 50 basis points. That's what the analysts and pundits are all, saying is going to materialise. And the same for the Kiwis, Sean. So that we're off and running, 50 basis point hikes, and that might be the new normal. If they do 50 and then you've got the Fed doing 50, I sit here in Australia going, well, maybe it's no longer going to be a 25, it's going to be a 50 first cab off the rank. So, yeah, this week would be an interesting, that short week, 4 days leading into Good Friday on Friday, of course.
Peter, the big sort of outlook opportunity perhaps for energy demand in Asia and China in particular is the fact that the Chinese government may be compelled into a very significant stimulus program coming out of this COVID moment that they are in. Ultimately, we've seen Omicron blow through a lot of places here in Dubai, all over the world. It came and went ultimately. And
Yes.
one has to expect it will do so in China. When it does pass through, the other side of it could be a very bionic recovery, that sort of V, if you like, with Chinese muscle to spend. Your thoughts on where China might go on the backside of Omicron regarding further stimulus in the second half of the year, particularly when you have the Communist Party election in the fourth quarter?
Absolutely, Sean. So first off, yes, I won't be surprised to see massive stimulus. The other side we've got to be conscious on as far as the property sector, which makes up such a large component, I think it's around about 30% of GDP of their domestic economy. So you're looking, and still to work through some of those large developers that are under large financial strain, to put it mildly, the Evergrandes and so on. So that's got to be a consideration that's got to be inhaled. And then the government is going to be, I believe, due to naturally the Omicron working through, and if it can be isolated only in that Shanghai region and it doesn't blow across to other, and we're coming into summer, so that's a positive. Then if that can be constrained and contained, it's going to be a plus for China. And I think that the government will action a very aggressive stance as far as stimulus. If it was to become a far more dramatic situation, Sean, that it engulfs many different cities across the vast landscape of China, then that changes the footprint as far as what and how they action those remedies moving forward. Time will tell.
Have a great week, everybody. We'll be here every morning, 10:30 UAE time. All the best. Thank you.
Thank you, Sean. Thanks, Malila.